Vinay Chenagathia, Managing Director, Portfolio Manager, joining us live on the program this morning. Good to see you once again, Vinay. So I guess let's start with Japan, since we did have a miss on the deficit side, wider than expected. Exports missing, but yes, stock markets are up a little bit, but the yen seems a bit sticky, don't you think?
Yeah, I mean, a wider deficit by nature, by definition, is good for the Japanese economy because it weakens the yen.
Really?
Yeah, in a sense, because a lot of the growth momentum that you're seeking in Japan today is through exports. So a weaker yen actually helps them. But of course, if you look at the nature of the deficit, if the weakness is due to high import cost because of fuel, it's going to hurt corporate profitability at some point in time.
Okay, so does the stock market continue in Japan then? We're up like 30% or so, taking a breather since April.
I guess the important thing is what comes out next on the third arrow of Abenomics, and that's going to be very important.
Are you not tired of talking about the third arrow yet?
It's not come out yet. So as long as it doesn't come out, people are going to talk about it. But if you take a step back and look at the GDP data which came out, domestic investment was very weak. It contracted 6 quarters in a row in Japan. And that, I think, is critical. And that is likely to be addressed by the third arrow, which is going to promote domestic investment by the Japanese corporate sector.
Okay, well, let me ask you this, Vinay. Do you think that it's Abenomics that'll move the Nikkei in the future, or do you think it's going to be Fed tapering that'll have the bigger effect?
They both, I mean, a Fed tapering could be positive for Japan because it's going to increase the interest rate differential between Japan and US, and that's going to prompt out foreign investment by the Japanese domestic guys. If you look at the last 6 weeks data, about 4 trillion yen has been moved out of the Japanese economy into global markets, fixed income basically. Yeah. And that's part of the reason why the Japanese yen should weaken going forward. Okay,
so that sounds like if the yen weakens, we should get more gains in the stock market. So. That's kind of how it works, this relationship. What about emerging markets? Because for U.S. stocks beating BRICS the most ever that we've ever seen, what does that mean for the emerging space? Do you just give up and go to the developed side, or what do you do with your holdings in the emerging markets?
Well, if you look at the fund flow patterns in the last 6 to 12 months, you've seen a distinct shift out of emerging into developed markets. But emerging markets remain a structurally positive story for us. You see good opportunities, good valuations, you buy them. There are some structural improvements also going on.
Right, but there are also some crises. I mean, have you seen what's happening in India? That stock market is losing big, and so is Indonesia right now. And the people are concerned about these two I countries, what happens in Indonesia and India with capital account deficits, major ones.
Yes.
Current account deficits.
And that is a part of the process of growing up, because some of these economies took growth for granted, and they took a step back on structural reforms. You know, they allowed their current account deficits to balloon. They allowed domestic savings not to grow as much. These economies need very high levels of capital expenditure to support infrastructure growth, and therefore realize the huge demographic potential they have. You know, but if you don't save enough, you have to depend upon foreign savings, and that hurts you in environments like this when interest rates in the U.S. are going up. Seems like the latest data in India suggests that the current account deficit went down a little bit, but they need to do a lot more to regain investor confidence. Okay,
now if you could, because I know you're a long-only fund, would you short India and Indonesia right now?
We are underweight with the economies in our regional portfolios.
Yeah, but you can't short them.
You can't short them.
But would you if you could?
Well, an underweight reflects in a kind of long-short environment, a short position, you know.
Right. What about China? And what were you thinking when the stock market swung about 6% in 2 minutes on Friday?
Well, the interesting thing was you had a slew of emails coming out from the broking side talking about, hey, RRR cut on the weekend.
Oh my goodness, there's so many rumors that were flying around, and common shares being shifted to the big caps, and then actually there was a correct report that came through online that said Everbright was behind a 7 billion RMB trading loss, but they were highlighting one trade, but it looks like it was a computer malfunction.
Yeah, it was an arbitrage-driven trader apparently. Yeah. The good thing is there was some action immediately by the regulators, which suggests that they are moving up the line in terms of better regulation, which is a positive. I mean, you've had trading errors all over the world. You've had it in the US, you've had it in India. So it's something which comes with algorithmic trading,
Yeah, so
automatic trading.
It's nothing that we haven't seen before.
Yes.
It's not in China for a while. Yep. Okay, Vinay, thank you so much. Have a good trading week. Good to see you. Vinay Chenagathia there, Principal Global Investors.